million Series A round, and the VC firm's general partner will tell us more on the other side of this break.
Get ready for the night, right?
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. On Tuesday, payment infrastructure startup OpenFX announced that it secured $94 million in a Series A round as it looks to connect traditional banking systems with digital native infrastructure. One of the round's co-leaders was M13, which invests in early-stage disruptive businesses. Joining me now with more is M13 General Partner Latif Paracha. Latif, welcome.
Thank you so much, Kristen, for having me.
Yeah, it's great to have you. And let's hear, in your words, what was behind this investment.
So at M13, we're deeply thematic about many markets, and we were very, very excited by what stablecoins could do. And then we went out around the world and found what we thought was the best entrepreneur that shared that same vision for us. And so we were very excited to back OpenFX, which is building infrastructure for, we think, the modern age. If you look at the way money moves around the world, it hasn't changed since the 70s. It takes several days for money to move. It's very, very expensive. And they've collapsed all the middlemen infrastructure, leveraged stable coins, and are really, really making a huge difference for their customers.
What sets apart OpenFX?
Well, really, it's the ability to leverage this new infrastructure to make a step change improvement for their customers. So let me put it in perspective for you. If you're sitting as a company in Dubai and you want to move money to Sao Paulo on a Monday morning, that will take you maybe 4, maybe 5 days. So that money will get there Thursday or Friday. It'll touch many people along the way. And a $10 million transfer as a company will cost you about $150,000. And so that's about 150 basis points. With OpenFX, that same transaction Monday morning gets there an hour later and will cost you under $10,000. And so we're not talking about a business that's making incremental improvements for their customers. This is transformational, and as a VC, we're most excited to back things that can be transformational in their markets.
How do you see this growth evolving over time?
Well, really, I mean, the corridors that are much more mature, say moving money from the US to the UK, are fairly efficient. I think where you'll see the most growth is in the emerging markets. So they're deep in Latin America, they're deep in South Asia, where these markets are very opaque, it's very, very inefficient, and I can see the business today, which by the way launched less than 2 years ago, is doing nearly 50 billion of volume and is live in 15 countries. I see us expanding globally, particularly in expanding in emerging markets. And I believe that the business today, as I said, does about 50 billion of volume. we should be north of $1 trillion of volume, I think, within 2.5 years. If I don't know if the company's totally signed up for that just yet, but as a excited VC, I think that's what we expect. And to put that in perspective, TransferWise, now known as Wise, which is a darling of the last fintech generation, it took them 15 years to get to 250 billion of volume. So this business is doing 20% of that volume in less than 2 years. So we're very excited. Prabhakar is a once-in-a-generation entrepreneur, and we believe he's going to scale this thing very, very quickly.
What do you like about stablecoins versus other methods?
The biggest innovation is that they're stable, i.e. they're backed by dollars. And so I think there's often misconceptions that this is a crypto thing. And really it's that we think stablecoins are the ChatGPT moment of all of fintech. And the reality is it has transformational impact for not just consumers. So if you're in one of these war-torn countries where there's super high inflation, would you rather have dollars, or would you rather have your local currency? And I think that's the answer is obvious. So what we like about it is that it provides great stability for both consumers and for institutions, and it allows for money to move much, much more quickly than you could ever do that, previously.
Any other investments or opportunities that are on your radar, Latif?
Well, we're very excited. So obviously AI is an area that is the greatest innovation we've seen since the Industrial Revolution. So we're spending a ton of time in AI. We're very bullish on agents being able to transform many parts of the economy. At M13, we're most bullish actually on industries that have friction. And so fintech's a great area where there's a lot of regulatory, there's a lot of compliance, healthcare, government. These are really, really exciting areas where if you have AI and then a lot of actually friction, it sets you up to have a very defensible business. So you can see us spending more time in those categories. In fintech, we think agentic payments are going to be very, very exciting. By the way, we think they're also going to be run on stablecoin rails. An agent on 3 p.m. on a Sunday is going to want to transact. They're not going to want to wait till the banks open Monday morning. And KYC and KYB are very challenging for our banks today. Imagine them trying to know our agents. And so we believe there's going to be new companies that rise that also take care of that opportunity.
All right, M13 General Partner, Latif Paracha, thanks so much for joining.
Thank you so much, Kristen. Glad to be here.
Yeah, congratulations.
Thanks.
Okay, everyone, stay with us because you're taking a live look at that opening bell podium. And on the other side, Versigent is set to open equity markets after a spinoff from Aptiv. We'll tell you more on the other side of this short break.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment here, Swiss-based Versigent is set to ring the opening bell to celebrate a milestone. This firm, which designs, manufactures, and delivers low and high voltage electrical architectural solutions, is here to celebrate its NYSE listing. The company is completing its spin-off from another NYSE-listed firm that's active, and soon Versigent will start trading under the ticker symbol as a standalone firm that is VGNT. Now, through its solutions and global footprint, Versigent operates in over 20 countries, and the firm says it's serving customers across automotive and selective adjacent end markets, addressing system complexity and electrification. Its CEO, Joe Liotini, is going to do the honors of ringing that opening bell. You're taking a live look at that podium as he gets ready to kick things off. Liotini previously served as Aptiv's Executive Vice President and President of Aptiv's Electrical Distribution Systems business. Let's take a listen to the open. A lot of smiles there on that podium. Versigent now trading as a standalone company under the ticker symbol VGNT after that spinoff from Aptiv. And again, its chief executive, Joe Liotini, is going to join me on the trading floor in just about 20 minutes for more on what's ahead for this firm. We are officially off to the races. No joke, everyone. It's April 1st, the first trading session of the second quarter, and stocks extending yesterday's big gains. In fact, the major indices rising more than 2% yesterday for their best session since May. And it looks like we are up fractionally at the open. So I do want to bring in Sam Stovall, he's Chief Investment Strategist at CFRA Research. Sam, great to have you on the program this morning. Ended the first quarter as best equities could. Where does this put us as we start the second quarter of trade?
Well, good morning, Kristen. Yes, we had a pretty tough first quarter because the first quarter low in the S&P 500 undercut the prior December low, and traditionally that's not a good sign for the equity markets for the full year. During midterm election years since World War II, that has happened more than 3 out of every 4 years, with the average full year decline being about 3.5%. In addition, the first quarter itself was negative. However, even with such an inauspicious start, April tends to still be higher, not only on an average price change basis, but also on a frequency of advance basis.
It is interesting, Sam. I know you watch the numbers very closely here. Obviously, we're still in a headline-driven market. What more can you share under the hood about where we could go from here?
Well, I think that we are experiencing a relief rally right now. I think we're going to have to take a bit of a wait and see attitude. Even though this morning's True Social post said that Iran is seeking a ceasefire, but the president says he will only grant that once we see the Strait of Hormuz reopened. If that occurs, then I believe we could be in the midst of a V-shaped recovery. But if that ends up taking longer to materialize, then I would tend to say that it really is just a short-term relief rally. The market was oversold with the RSI on the S&P being below 30, as well as several of the sectors within the market and sub-industries.
What does the data tell us about April? Is it typically a positive month?
Yes, it is. Since World War II, it is the third best month of the year. Since 1950, for the Dow, it's the second best month of the year. And, you know, in many ways, it's sort of a relief rally month because March has traditionally been so challenging. But we're in a midterm election year. So things are quite different. Since 1990, which is as far back as S&P has sector level data, 9 of the 11 sectors have posted average declines in Q2, and the market itself has posted a more than 3% sell-off. So a lot of volatility tends to occur up until the midterm election itself, and then the market tends to be very strong over the coming 12-month period.
And does that matter how the midterms shake out, or does it not matter based on who takes the House and the Senate?
Well, traditionally in a wave year, which is what we have now, meaning that the president and both houses of Congress are of the same party, we tend to see 4 seats in the Senate switch sides and 33 seats in the House change hands. And so that could challenge the plurality in Congress right now. So volatility does tend to be fairly high. But even after such a change, Wall Street says, well, at least now I know how to play the market going forward. Then the volatility tends to decline. And in that 12-month period that I just mentioned, from October 31 of midterm election years until October 31 of the year after, the market gained 16% on average and rose in price 100% of the time since World War II.
Yeah. Sam, I do want to ask you, just in terms of what you've been following over the course of many decades, following these markets, you know, when we are in a situation like this, a conflict in Iran with questions about the end of the war and when it might come, what does that mean longer term for markets? We saw data this morning, but it's backward looking before this war started, and we could see that data start to change in the coming months.
Well, it all depends on how long oil prices remain elevated. The old rule of thumb is that for every prolonged $10 increase in a barrel of oil, that takes off up to 20 basis points of real GDP. Now, last quarter's GDP reading was a gain of 0.7%. So that basically could have undone the entire year-on-year gain. So we have to be very careful about that. And Wall Street does not die from old age. Bull markets don't die of old age, they die of fright. And what they are most afraid of is recession. But right now, it does not appear as if a recession is imminent.
Okay, so to that end, Sam, what I'm gauging is, you know, perhaps we could see volatility throughout the rest of the year. It is a midterm election year. We're still waiting for some of this data to shake out. And you've been following the numbers the past few months or so. But it doesn't necessarily mean that we are headed for a bear market. Is that right?
Absolutely. What I did notice is that it took an awful long time for the S&P 500 to fall into a pullback, meaning a minus 5% reading. That took 50 calendar days. And since World War II, anytime it took more than 40 days, while the S&P did fall into a pullback and maybe even a correction, it never registered a new bear market. And we have yet to fall into a correction or a 10% decline. And since 1980, anytime beyond 50 days did not lead to a new bear market, and we've already gone 63 days. So history hints, but obviously does not guarantee, that while a deeper decline may be in the cards, a new bear market is not.
Sam Stovall, Chief Investment Strategist at CFRA Research. Sam, thank you.
My pleasure, Kristen.
All right, everyone. Well, take a look here. This is a live look at the trading floor. Still to come, we're going to have shares of NYSE listed TD SYNNEX rising more than 5% after its earnings report. And its CFO, David Jordan, is going to talk to me about what investors are excited about. Here's a live look at the first trade bell. Yes, we are awaiting this. Versigent set to ring that first trade bell. He's done the honors. This company officially trading under the ticker symbol VGNT. He's going to join me later in the show, the CEO, Joe Liotini, to talk more about what's in store for this firm after it's spun off from Active. And of course, we'll have more from the Hill and Valley Forum on the other side of this break, so stay with us on NYSE Live.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live, everyone. Shares of NYSE listed TD SYNNEX rose by more than 5% on Tuesday after the release of its latest earnings report. You're hearing a first trade bell live from the floor as we speak. But this company, NYSE listed, beat on its figures and, of course, analyst estimates. Noticeable margins on the top and the bottom lines. And joining me now with more is David Jordan. He's the company's CFO. David, welcome to the program.
Thank you for having me.
Yeah, great to have you on the show this morning. So your company reported an 18% jump on revenue on an annualized basis. What was behind that?
So we saw broad-based growth across all of our product categories. So if you look, we really have two businesses. We have distribution and Hive, both of which perform phenomenally well and exceeded expectations across.
What should investors be taking away from these results? We saw a decent gain in the shares yesterday and a strong follow through today as well.
So the key message we wanted investors to take away was two things. On the distribution side, we continue to make great strides building an end-to-end global player supporting IT supply chains worldwide. And all of our strategies have started to produce meaningful results, and you've seen it both on the top and bottom line. Additionally, we have a separate business called Hive, which helps participate in hyperscaler CapEx buildouts, and that business is also accelerating. And so when you add the two businesses together, both the current depth and breadth of our capabilities, the size, and the potential, our future is quite bright.
So looking ahead, of course, I know your company wants to continue to build off of this momentum. What are tailwinds that can fuel that?
So we have a couple of tailwinds. When you think about, we are a leading player from a distribution perspective across all emerging technologies. And so we were one of the first IT distributors to take AI to market. We've been a leading security player, cloud. So all of the hyper-growth technologies, we are helping those companies distribute them worldwide. And I think we're early innings at continuing to advance those technologies and markets, which will ultimately drive growth for our business long term. Separate and apart from that, we have Hive, which continues to participate in all of the CapEx deployments for tier one hyperscalers. And we announced yesterday that we are under contract with all top 5 US hyperscalers with at least one program. And so we're early innings continuing to accelerate the growth and scale that business as well.
What are the biggest questions that your clients are asking right now?
So one of the questions that we got on the earnings call was, wow, it was a bit of a surprise how strong your results were and the increase in the guide for Q2. And what we tried to remind people of is, we're 3 or 4 years post-integration. We've made a ton of investments in our business, and with a decent market, a strong team, and a sound focus, you're starting to see the power of our model. And so we're pretty excited about the results the team put up, and we believe the future is quite bright.
The future is bright. We like to hear that on NYSE Live. We know that your company also announced a partnership with network management firm FatPipe. How is that going to bolster TD SYNNEX's cyber capabilities?
So we partner with the who's who across all major technology areas. So specifically in our cybersecurity business, we're looking to advance both mature vendors and emerging vendors. And so we spend a lot of time helping educate those companies on, with your technology, if you leverage the reach and capabilities that we have across 150 countries, we can really accelerate your growth. And it's also good for our partners because they're constantly looking for cutting edge technologies that they can deploy in enterprises to solve their own business outcomes. And so when you power the depth and breadth of our capabilities with some of these emerging vendors, we can solve a lot of complex problems for companies worldwide.
You know, it's great, David, because we're speaking here on the first day of the second quarter. The first quarter is behind us. It was a strong end, and obviously that was reflected in your share price as well. An even stronger start on this April 1st for your particular stock. What are you going to be focusing on most closely now in this second quarter of 2026?
So for us, it's really two things. It's continuing to execute across our strategy to build an end-to-end distributor worldwide. And so if you look in each of our markets, there is white space within our portfolio that we believe we can capitalize on. And I think the teams have done an excellent job to date doing that. So it's a bit of a continuation. On the Hive side, and this is the business that helps support tier one hyperscalers, it's continuing to do a great job with the programs that we have today, and then win new programs with the new hyperscalers that we've brought on. And so I think when you take those two things together, we're hopeful as we move forward, we'll continue to put up quarters that are good for shareholders and ultimately good for all the partners that we support in our ecosystem.
David Jordan, thank you so much for joining us on NYSE Live.
Thank you for having me.
All right, everyone. Well, great to have David there joining us from Florida. The NYSE sponsored the Hill and Valley Forum in Washington, D.C., which took place last week and gathered leaders across the government, technology, and industry. I was on the ground and spoke with several of the key leaders, including U.S. Congressman Riley Moore of West Virginia. He told me what brought him to the event and how he hopes a new bill will equip the workforce of the future. Let's take a look.
Well, I was just on a panel and where we were discussing the industrial base, the defense industrial base, critical minerals, and how we're going to train and equip the workforce of the future to meet those critical needs and really kind of strategic imperatives for the United States in terms of manufacturing and what that's going to look like in the future.
What will it take to equip the workforce of the future?
Glad you asked that question. I got a bill for that. So one of the things that we've really been focused on over the years is educating and training the workforce, trade schools, vocational schools. Those things are important. Don't get me wrong, they are important. But what is unique about the trades and vocations and manufacturing is really a lot of the times the cost incurred is once you get out of school. Because to be able to buy your own tools, equipment, licenses, certifications, new business startup costs, think about an auto mechanic who gets out of school there, they got to buy tens of thousands of dollars worth of tools and equipment to even start in their profession. So the Jumpstart Savings Plan, which is a bill that I introduced, Jumpstart Savings Act, would create what would look like a 529 account in terms of its tax savings benefits and capital gains tax, allow people to save money to buy those things after graduating from one of those programs, stay open in perpetuity, and so you could either long-term save, short-term save, but pay for those things like tools and equipment and licenses, certifications, new business startup costs, which on average are about $100,000. It's a lot of money for somebody who's like 19 years old who just got out of trade school. So this is going to jumpstart their career, so to speak.
How does robotics and artificial intelligence factor into this?
Well, to me, look, I was a welder, so I went to trade school, and that's how I kind of came up with the Jumpstart Savings Program. But AI and robotics, I think, provides a very unique opportunity for the workforce here in the United States as they're reshoring things. And what it does is enable people to be able to work longer, work safer, and be more productive. And what I mean by work longer is the longevity of their work life. So a lot of people, we get injured. You get injured on the job site. I've been injured on job sites I've been to the hospital. That happens. Those accidents happen. But through AI and robotics, you can be safer and you can work longer. I mean, by the time people now are getting to their mid to late 60s and they're ready to retire, they have a lot of health implications that are involved in doing those types of jobs. And as we're taking jobs back and bringing them here to the United States from places like China, where perhaps it might take 1,000 people to manufacture some widget, AI and robotics would allow us to be able to reshore that here in the United States, but then still pay our workers a good living wage. So maybe it takes 1,000 in China, it takes a couple hundred here, which is a net add to the United States economy and our workforce.
Are you optimistic that collectively this can create good paying American jobs?
I am very optimistic in that, because a lot of the overhead that would typically be there in a manufacturing type business is going to be really kind of eliminated, and so you will be able to focus a little bit more on the worker, making them safer and more productive, where you will be able to pay a better living wage in those types of jobs.
Of course, you're a part of the Hill. How do you envision working with the Valley moving forward?
Well, they're going to be critical in all of this, because they're going to really be able to help us in this public-private partnership be able to try to create some of the solutions to this. So we're certainly going to be leaning on them. Believe me, we're not like the brain trust of innovation up there. That's what the Valley is for. We are the policy makers. So we're really going to be leaning on them in terms of where we need to try to direct our attention and our policy that's going to be able to create the best next innovations out of the Valley.
Any key takeaways for you today here at this event?
Well, it's really well attended. I was looking out, when you're on the stage, I'm like, my gosh, there's a lot of people here. This is great. And a lot of young people. So it was really heartwarming to see that. Particularly, I'm on the Hill, and it's usually people a lot older than me on the audience. So no, this was great being here.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live, everyone. We are down here on the trading floor of the New York Stock Exchange. You saw my next guest, the CEO of Versigent, up there on that opening bell podium doing the honors as this equity market opened for trade on the first trading day of the second quarter. It's April 1st. No joke there. Joining me now with more is Versigent CEO Joe Liotini. Joe, welcome.
Thank you. Thank you. Pleasure to be here.
Yeah, great to have you here at the Stock Exchange. And how does it feel to ring that opening bell and start trading today as an NYSE-listed company?
It feels awesome. It was great to have the whole team together. First day of Versigent on the market. Super exciting.
Yeah. Why is now the right time for this listing?
Yeah, so we've been working on this for a year, so it's perfect timing for us. We have awesome growth prospects. We have a good future ahead of us. We're really excited about where the market's going and our ability to really support advanced architectures, which is what we do.
Talk to me more about that special sauce that you have in this space.
Yeah, our special sauce is simple. Our engineering expertise is great. And as the world gets more and more complicated with more and more autonomous vehicles, complex in-cabin features, we're the company to solve those things, design those things, and manufacture those things. And so we're perfectly timed for this launch.
As the leader of this company, the CEO, what is important to you from a share price perspective now that shares are open for trade?
Yeah, what's important to us is we do a great job. We execute on our growth strategy and our financial value creation strategy, making the thesis come true. And over time, the stock appreciation will be strong, and it'll be an exciting opportunity for many shareholders.
I'm curious here in terms of your goals going forward. Like I said, we're speaking here on the first day of the second quarter. What does the second quarter mean to you? What do you want to achieve?
Yeah, so we're in the spin process. We just came through that. So doing that flawlessly, really building up the expertise that we've said, executing on our financial goals, and just really getting ready to show and demonstrate what we could do as a growth strategy, and really building that story throughout the rest of the year. That's super important for us. It's day one, so building that track record is really important.
What does expansion look like to you?
For us, it's continuing to grow as vehicles get more and more complex. We grow with them. Continue to get programs that are the most complex, we're the best at it. And then also looking to move into adjacent markets. That's commercial vehicles, agriculture, construction, battery energy storage. All these things create big options for us to grow in. So we're excited about that.
What else is in store for you today here at the NYSE?
It's a little bit of team building, a little bit of media, and then just really making sure we understand all the opportunities ahead of us as a team.
Of course, I'm glad that you mentioned the team there because a lot of work goes into a day like today. What teamwork was needed to reach this milestone?
Oh, it's been in a full year of preparation, really getting ready for this. And so the separation from the company, getting ready, getting organized to stand up our own public company, and just executing flawlessly throughout without distraction, making sure our customers get the best possible answer and service throughout.
So we had some traditions take place here at the stock exchange. Obviously, you rang the opening bell. Your team also rang that first trade bell not far from here. What was that like?
It was awesome to have the whole team together, to do it as a group, to be part of that first day. We have people who've been on the team for 10, 20 years and people who are new within the last couple months. But to do it as a group was really, really special and felt great.
And in terms of what the group means to you, anything more you can share as we look to round out this interview?
Yeah, I mean, we have a group of leaders who are ready for a big challenge, who came for a challenge or stayed for a challenge. We have a group of experts in all their domains and fields, but we're working together as one cohesive, aligned team, and I think that's pretty powerful, and I think it's gotten really the whole company excited about what the future holds for us.
Will we get to see more of you down here on the floor of the stock exchange?
Absolutely, absolutely. We'd love to come back. Super special place, super special.
And of course, now as a publicly traded standalone company, Joe, congratulations again.
Thank you very much. Thank you.
All right, Joe Liotini there. He is Versigent's CEO. You saw him on that opening bell podium. Starting the equity markets today at 9:30 a.m. Eastern. And of course, this stock now open for trade down here on the floor of the NYSE. Speaking of trade, it's the first trading session of the second quarter. We had a very strong end to the first quarter. In fact, the major indices, the Dow and the S&P, both closing up more than 2% yesterday. The Dow jumped more than 1,100 points. And that was the best session that we had seen for those indices since May, almost a year ago. Well, we do see fractional gains across the board this morning as well. The Dow up about 0.5%. I see down here on the floor of the stock exchange, the S&P 500 also up 0.5%. We did have some decent data for the month of February. We'll wait to see how the data pans out for March. We will get a jobs report at the end of this week, and that'll be key for us, of course, as we continue our coverage on NYSE Live. A reminder to our viewers, you can catch us on all the streaming services that you see on your screen each weekday morning. We're live 9 to 10 a.m. Eastern here for the opening bell, and we're live at the close as well. You want to tune into our show, Taking Stock, 4 to 4:30 p.m. Eastern today. We've got a lot of great guests coming up, including the CEO and founder of Public.com, talking about a brand new AI brokerage account. You want to stick with us throughout the day. We'll see you later.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?